Hi, Chris Tonkin here. This is Tiger Talk. Today I'm going to talk to you about our outlook for wheat on the upcoming harvest, and specifically the treatment of grade spreads. The main ones of issue are ASW9, ASW1 in relation to APW1. As you may recall, last harvest there was a record 24 million tonne of grain delivered in WA. This completely overwhelmed the supply chain, and that's equipped to handle around 17 to 18 million tonnes at full capacity. The balance of the grain has been stored and carried over into the shipping allocated for this year's crop. We've talked about this in detail in a previous video, how it's important to remember that the majority of what was carried over was BFED1 barley and low protein ASW1 wheat. Now we are set to repeat last year in a supply chain oversupply, with GEA estimating another incredibly large WA crop at 21.1 million tonnes. Similarly to last year, we envisage the protein profile of this year's crop to be low. Last year, ASW1 Kwinana had an average protein of under 9%. It was around 8.7%, and this included grain up to 9.9% protein in the average. This year, grain above 9% will not be included in ASW1, but will go into an ASW9 segregation. It will depend how many of these segregations are available as to the total effect on quality across the state. This is particularly concerning as most wheat vessels are under contract to have a minimum of 9 to 9.5% protein as the minimum base. The introduction of ASW9, which takes ASW wheat over 9% protein, the large low protein wheat carryover, and large new crop to be made up of low protein, we do expect a very different story for AP1 pricing and ASW1 prices. Our concern is that the ASW1 spread will widen a lot with the season, the way it's looking across WA, which is particularly good. In our discussions with the trade, they've been quite worried about low protein ASW1 as well, and have started pushing the grade spreads out. This grain may be classified by traders as like clean GP1, but potentially with lower protein. The grade spreads currently are discounted to APW1 are around -$30 to -$35 a tonne for ASW9 and -$55 for ASW1, which effectively means it'll be sold into feed markets. ASW1 started at a disadvantage from the get-go, with ASW1 at -30 to -40 discounts early in the year, when it would normally run at around a -$20 a tonne discount. A lot of our forward cash contracts have exceptional ASW1 grade spreads on them, and they're around the -$20 to -$25 a tonne to APW1. This is far better than the current grade spreads of -$55 a tonne. It does mean that it'll be particularly important this year to match the correct grain onto contracts to manage the best value. We predict this discount may worsen to that of a -80 to a -100 for ASW1 less than APW1. This would effectively have ASW1 pricing to similar values or spreads as feed wheat, while protein grades such as AP1 or ANW1, if growing noodles, should strengthen in price. Last year we saw the demand for high protein wheat really come into play by late November due to a large amount of ASW1 being allocated to their old multigrade contracts. The need to secure high protein grades to get the shipping sorted and pricing moving away from multi-grade contracts to fixed grade contracts. So this year, we're expecting this to happen earlier, but we still believe October and November will be a crucial selling period for high protein grades. And if left too late, there may be an overall selling pressure on prices. If you have old wheat multi-grade contracts in play, they'll be good for allocating ASW1 onto. If you have, or expect to have, high protein wheat, then consider selling this once the price rallies and you think it justifies a forward sale. And know that like last year, it may not hold there for as long as you need it to. That's Chris Tonkin signing off.